How many times have you taken a trade and closed that trade too early? Or how many times you have taken a trade and you have not closed your positions and price came back to you hitting your stop loss? Well, if this is something that you're doing or you've been through and have no idea on how to deal with, then this video, guys, is going to be literally for you. I'm going to show you how you can objectively set up a valid target for your own trading so that next time when you take a trade, you'll not be lost or making any silly mistakes. So let's get started. So we're back again, guys, and buckle up because this video is going to be mind-blowing. And I've been giving you guys so many crazy stuff lately, but this one particularly, I've been doing a lot of research over YouTube and I haven't seen a single individual talking about it. And I'm not surprised. That's the reason why probably most of you guys are losing consistently money in the market instead of making it. So again, buckle up because it's going to be crazy. So what are we going to do, as always, answering all these questions so that by the end of the video, you guys will clearly understand what is happening, why that happened, and how you should tackle that in order for you to start making money with your own trading. So what is the number one question? Why I have said here, importance of targets in trading. Again, this is something that you will not see many people or gurus talking about it because this explanation of what I'm going to do is quite expensive, okay? And unless you're not in some premium membership or you're paying for some important educations, I don't think anybody's going to share that. So the first question, how do you define when you should close a trade and why this is important? So what do I mean by how do you define when you should close a trade? As I said on the intro of the video, right? I see a lot of traders taking a trade. So for example, let's say we are here taking a trade and then for some reason, okay, they have their targets somewhere around here, right? Up this level. But once they're inside the trade and they start seeing the price giving them 10 pips, 20 pips, 30 pips, or maybe 100 pound, 200, 1,000, 2,000, and they're expecting to get a return of 5,000, what they do is they close the trade because they're scared. They don't want to lose the money, right? So you fear that you might gonna lose what you just gained, or you close it too early, and then later what you see is the price is coming to a TP and you are full of regret, okay? Or the other way around, and that's quite interesting because, in trading, it's either black or white. There's no other way around. So that's why once you understand the different type of pattern happening in the market, then you will know how you can tackle that. The other side of the coin is that some people, they take the trade and they're like too confident, or they're like, oh, I'm making 1,000, 2,000. Okay, my target is 5,000, but you know what? I've seen that happening before so many times. So let me take that to 8,000, right? So you target all the way up there. But then for some reason, when you are around 5,000 with your initial target, you see price, bam, coming back to you. And then you're either break even, or some people, they even hit a stop loss, okay? So what is it I'm telling you over here? Is that traders are facing these two important factors that are ruining the trading, okay? And the only way for you to tackle that is to give yourself some objective targets. That's why I'm going to discuss about targets, okay? And this is very important. Why I said here this question, why this is important? Why do you guys think it's important to settle a target? Because based on the two scenarios that I just explained it to you, that are common problem that many traders are facing, you tend to trigger something very, very important, which is your emotions. And those emotions, most of the time, are extremely, extremely negative. So what do I mean by that? Is that if you take a trade, right, and you close too early, you have a sense of regret. You have a sense of punishing yourself because you didn't follow your rule and you end up making mistakes and so much more. So what happens is that next time when you're taking a trade and price comes near to a TP and you see price coming back to you, emotionally you react to it because you feel like, oh, you know what, I was actually doing great. I used to close early, at least I was making profit. But now it seems like price is not reaching my target, but I'm still hitting break even or stop loss. On the other way around, people that are over here, they are like, okay, I know I can make 5K, but I'm targeting all the way to 8K. But then if you target it, emotionally you feel so happy. And you're like, okay, I did it this time. Am I going to be doing next time as well? Because it worked. Or if it didn't work, you will be like, oh shit, why why I did not close on 5K, but I was looking for 8K, blah, blah, blah. So emotionally, you will be always in a consistent battle between yourself and literally yourself, like within you, right? And that's gonna mess up your account because your equity curve, your graph, like your own P&L will not increase like this, but most likely will be like this, and most of the time it just keep going down because that's eventually what's gonna happen. But if you do understand what is a valid target and what is the definition of a target, and you stick to that, I can promise that you can see some crazy results and returns. Okay, so what do I mean by what is a valid target? There is a very big misconception all over social medias where people think that having a target like this, okay, is not enough. You need to know more. So what do I mean is that there are several things that can be a target for you. Some can say like liquidity, okay? Some can say supply and demand. Some can say order block. Like, and you'll be like, okay, which one do I go for? So what people tend to do is that when they start starting with their trading, they start focusing so much on understanding which one of this level, this one, or probably this one, or this one, is the most valid level. So then they have literally so many theories, 1, 2, 3, and they take a trade and they're so confused because they're like, okay, last time I closed in an order block, but this time I'm gonna close an order block, or maybe in a support or resistance. So what do you guys think is the problem in here? Is that you guys are missing out the biggest important lesson, which is not the target itself, which one is the best, but target based on probability and statistic. Yes, guys, this answer that I'm giving to you or this problem is one of the most important underestimated concept that I see among so many traders. So what is it I just said? Is that if you have an order block, you have a support resistance or an imbalance over here, right? It will always, and I'm saying always, 100% of the time, price will respect these levels, right? Based on statistics. There is no such thing that you start trading and you learn trading and you feel like, okay, I know that this target, let's say this order block, will be hit 100% of the time. So if I'm taking a trade over here, if I see order block, then that's the one I'm taking, and then I'm gonna make money and I'm gonna crash it. But that's not happening, because if one time price comes to the order block, the next time price could come to the inefficiency. The next time again, it can come to liquidity. And then you can have sequences where price can come liquidities few times, order blocks few more times. But that doesn't mean that just because you see that liquidity or that support or resistance getting hit few times, that's the best target. Now, why I'm telling you this is because I've seen so many people are obsessed with learning new concepts, new theories, new whatever strategies, secret sauce. Guys, there's no such secret sauce. Everything in trading is based on probability. Whether it's your stop loss, whether it's your target, whether it's your TP, anything they're doing. Okay? So I want you guys to take away this because this is extremely important. So now the real question is, what is a valid target? How do you define a valid target? And this takes us to the next one. The number 3, I think, is the most important part of this video, which is technical versus risk management target. And here I says the only thing you need to be aware of is dynamic versus static TP explanation. Buckle up, because this one is gonna increase your trading result like crazy. So what do I mean by dynamic versus static TP, and how I can link this to a valid target? So when it comes about dynamic, okay, is always people that trading only one singular theory or concept. So what do I mean is this, that let's say here, right, in this one, you go your fair value gap. Okay, so you're targeting your fair value gap. Now, whenever you're taking a trade, somewhere around here, so when price comes here, breaks the structure, right, and you're taking a trade, you will always target the next fair value gap, or the next, as I was saying, by this case, let's say the next fair value gap. So what happened is that the fair value gap will happen anywhere randomly on the chart, right? So it can happen somewhere, let's say around here, it can happen somewhere around here. You don't know that until or unless you see what's going on to the left. So by having the price being in a different level point, so having this imbalance happening over here, sometimes over here, over here, it creates a dynamic TP, right? So dynamic is because you take a trade from here And then what you do is that your exit point, in this case your target, is dynamically decided based on where the fair value gap is allocated. So therefore, if you take a trade, sometimes it can be 1 to 3 if the fair value gap is here. If the fair value gap is over here, it can be 1 to 5. If the fair value gap is even higher, it can be a 1 to 10. Okay, so that is a dynamic, and this is something that I see a lot of traders doing a lot. A lot of traders are taking this type of setups and they target this specific type of objectives. However, the one that I personally prefer a lot, and the one that actually been working for me very, very good, again, this is a personal choice, but I think is the one that makes most sense, is a static TP. So what do you mean by static TP? When I say static TP, I don't take in consideration this fair value gap, this order block, this support resistance. What I actually care is about managing my risk. That's why I say risk management over here, target. So if I take a trade with a 1% risk over here, right, somewhere around this zone, then I can say to myself, okay, my exit point will always be at a 1 to 3 risk to reward, or 1 to 5, or 1 to 10, and 1 to 20, based on whatever way you are happy with. And I think personally that this way of deciding target is extremely important, because this one, okay, what it does is that it helps you a lot psychologically and emotionally, okay? Because dynamic way of taking TP is good. I'm not saying it's bad. I do use it, but not as often as I use it as static. Static is my most favorite one. And then if I want to blend the static and the dynamic, what I do is that within the static, if I'm 1 to 3, I can take majority of my trade out, like partial, and then dynamically I can target that towards one of my objective. That can be an order block, fair value gap, or liquidity, or whatever you're trading. Okay, that's the way you can blend that. But the thing is that if you just trade dynamic, and this is what something I experienced, I'm sure many people can experience as well, is that many times when price is near your fair value gap, you're like, price almost reached there. Should I close it? Should I close it? What if it doesn't feel the imbalance fully? What if it doesn't hit the order block fully? So you start asking a lot of questions to yourself. What if that is like 1 to 2, and you're like, that's a very small risk to reward. I want to go further. I want to go more. What if he taps there and then he reverses? So you start asking so many questions to yourself, and by doing that, you trigger emotions. And when you trigger emotions, rationally, you're no longer connected. You start making silly mistakes, right? While on statics, just think about it. On static, if you say to yourself, okay, I'm taking the trade, my target is a 1 to 3 fix, or let's say 1 to 5, okay? Then fine. If price gets there, it's fine. If it doesn't get it, that means the objective has not been hit, and then I just leave it like this. I don't care where is my FVG, whether it's here, whether it's here, whether it's here, I don't care, or whether it's my order block, or whether it's my support resistance, wherever you're trading. All I need is I'm taking the trade, and I'm exiting when price reach my 1 to 5. And the last point, you can blend, as I was saying earlier, right? You can blend your static and dynamic together just by taking partial, let's say 1 to 5, and you're like, okay, you know what? I think there's an order block over here. And that's something that I've seen many times playing out very well. So I'll take partial over here, and then I'm targeting next over there. So let's see what happens, right? You can do that. But understanding the difference between the static and dynamic, I think, is one of the biggest breakthrough I ever had. And trust me, I never seen anyone talking about it or even explaining that to me. I had to go through hours and hours and hours of backtesting on my chart, right, to understand what is actually happening. By the way, guys, before I continue, I always forget to say that, but if you like so far and if you watch so far, I will truly appreciate if you can subscribe, like the video, and also leave a comment, because it does actually help a lot to grow the channel. And I had a very, very good feedback. A lot of people love the content. I've seen a lot of people reaching out to me telling me how much the trading has improved since I started making these crazy videos. Okay, so if you like and subscribe and leave a comment, it will help me genuinely grow a lot this channel. But this being said, let's carry on the topic, because it's just fire. It's fire over here. Okay, so now that you know that, you can truly know what is the answer to how do you establish a valid target for your own trading. Part of the answer, I gave it to you, right? Just by telling you the concept of dynamic and static TP. This is very, very powerful. On the other half is that you cannot just base your exit point, target point, if you don't have at least a bare technical understanding of what price is going to do next. So what do I mean by this? Is that just by knowing order block, and inefficiency or support resistance, all of that is not enough for you to take a trade. The most important thing you need to know is the direction, guys. Oh my god, the amount of traders I see not paying attention to this is crazy. People are like, literally the other day, I've seen a guy that was discussing on someone on YouTube saying, oh, I'm taking because there's an order block, there's a fair value gap. And someone asked this guy saying, okay, but why did you take the trade? How do you know it was going buy or sell? And he just simply said, oh, I don't know. I just seen an efficiency, so I thought, he said, I thought price is going there. When in reality, you don't need to say I thought. You need to say, I know it because I see price doing A, therefore I'm doing B. I see price doing B, therefore I'm doing C. You guys understand what I'm saying over here? So how do you establish a valid target? Before even you establish a valid target, you guys need to learn how to identify the bias of the market. Because if you genuinely don't have any idea if the price is going higher or price is going lower, what's the point for you establishing a valid target? What's the point for you establishing something that will never be reached? Are you guys following what I'm saying with this? Like, this is crazy. Okay, this is crazy. So once you establish the way you analyze it and you see how and where the market is going, now you can start doing what I just said to you before, which is using technical elements and developing your dynamic setups, or using just mathematics with risk to reward, risk management, and taking this trade. Otherwise, ultimately, you can blend both of them. But this is something that you will not do it just by watching my video in here. I'm giving you the key input that you need to manage your exit criteria. What you have to do, however, is jump on the chart, okay, and start data collecting, start backtesting and seeing which one is more comfortable for you. For example, on the static, I know many people, they'll be like, okay, I'm doing 1 to 5, but I see then a lot, if not many times, price goes to 1 to 20 or 1 to 15. So what do? Do I get out of the market on 1 to 5? I think that's not very good for me. So what is it that you should be doing in that case? You should be collecting data. You should be understanding why and how exactly price is doing 1 to 10. Is it in a retracement phase? Is it an expansion phase? Or in a ranging phase? What phase of the market? Like, do you guys understand how you need to think about the market? How you need to deep dive and dig and keep digging every single time? So watching one video is not enough. Watching the video I'm doing though, it will give you an input. It will make your path so smoother that you guys have no idea about, right? I wish I had someone telling me and explaining what I'm just telling to you guys now. Trust me. And this concept, this information itself is worth a lot of money. I'm telling you. Okay? So please don't underestimate that. Now, the very next question is, what if your target is not hit? You see, many people, they think like they need to hit a target every day. They need to hit a target consistently. You need to trade every day. You need to hit your target. Otherwise, you're a loser. But that's not the case. Because if you're taking a trade over here, right, and your exit point is somewhere around 1 to 5, let's say somewhere around here, what is it, 1 to 5, but for some reason price comes to 1 to 4.70, and then you see price coming back to you, it's okay. It's okay, because you have to understand that your probability and your statistic at that time did not play out. Therefore, you just wait patiently. Okay? Do not make the silly mistake of saying, oh, I see 1 to 4, I see, whatever, 1 to 4.7, I'm close in it. But then you see price going higher. In that way, it's no more objective. It's subjective, because you based your TP and exit criteria, based on whatever you feel at the moment, which is absolutely, absolutely wrong. Or on the other side, you feel like, I'm targeting 1 to 5, but I see price coming 1 to 4, 1 to 3.5 the majority of the time. That means that there is an error there. And the error is that you shouldn't be even targeting 1 to 5 if you see the majority of the time your trades comes to 1 to 3 or 1 to 4. So then you stay within that specific range. Guys, are you following what I'm saying? Like, it's crazy. Okay, it's crazy. So those are the things that you should be noting down, or rather watch this video a few more times so then you can understand what is I'm talking about. So when price is not hitting your target, don't worry. Just sit back and wait for price to do the same exact pattern again and again and again. That's the beautiful things about the market. And the most beautiful thing is that you can trade any time frame, any day, any moment of the day. Okay? So you will always see, like, literally the next setup is just around the corner. I'm telling you. Now, what I'm going to be doing is that I want to share with you guys, I'm going to be showing some live before and after examples that I did with my community inside Telegram. By the way, the link is in the bio, in the description, whatever it is. Join is completely for free, okay? I don't charge penny. I never charge anything over the last 1 year whatsoever. I'm doing this channel, no mentorship, no nothing for now, because I had a lot of requests, so I'm building up something very, very crazy. But for the time being, everything is for free. So try to take as much advantage as you can learning all this concept from me, okay? Like, I'm genuinely trying to help you guys, not asking for anything in exchange apart from a like and a subscribe and probably a comment. Now, I did a lot of before and after, like a lot of mind-blowing before and after on news event, on technicals event, on even calling trades from weeks and months ahead, just because I knew my targets dynamically and statistically, static way, right? So I knew where to go. So I'm going to be showing you and I'm telling you why this is important. One of the best idea I want to share with you is this idea over here. This is a setup. This is actually an analysis that I did based on one of the guys in the community that he took a trade for a buy and he wanted to get my point of view as well. And he did actually a very excellent job. He did a very, very good job, very good analysis and everything. And then that was what I provided to him on natural gas, right? So you can see the date is March 2024. It was live, so you guys can see the timer and everything over here. And I was saying to him that based on my understanding, 1, 2, 3 were the target where I could have taken the trade for, okay? But you can see my TP around that time was here, but the itself was like a 1 to 20. I didn't need to make 1 to 100. However, when I analyzed this chart, I knew the extension and the potential of this trade, how far it could potentially reach. And I needed to understand this because eventually, if I wanted to swing the trade, I could have taken the trade from here, and I could have targeted partially here, and the last one over here. That would have been really, really, really good. And it would have allowed me, by me being aware of my target, if I'm taking a trade over here, I should not close until price is not reaching this level. If it's not, then it's fine, I just wait. So let me show you what happened afterwards. That's the after. Look at this beauty. Isn't that just crazy? This was a trade with a 1 to 40 risk to reward setup. Okay, and the craziest thing is that price did exactly as I was expecting, also based on my drawing. So I had this drawing, price break to the upside, retracing, coming down here, and then going all the way up there. Look at the way price reacted for my TP1. Look at the way price reacted for my TP2. Look at the way price is reacting away from my decisional point, which was eventually the TP3. So that's what I was saying. I knew that I could have scaled it out based on understanding of where the market is going. Let me show you by the way, this is June. Okay, and again, this is live. So this was like literally not 1 or 2 days, literally months before. Look at this, the before, March, like January, February, March, April, May, June, like after a few months, right? Like literally a few months later. Look at this price, price was here, breaks above, retracing and entering and going higher. Look at this, breaks above, retracing over here and going higher. So by me knowing this, if I wanted to swing this, you see this 1 to 40, I could have easily done that, right? With that conviction. But let me show you more example. This is the same thing I did with the news event. Again, it's a live price timer. You guys can see May the 3rd, right? 12:29 UK time. So I was saying to the community, I did a breakdown. You guys can stop and watch it, or you can join the Telegram and you can read it from there. I was saying this is what I was expecting. This should be a nice TP zone. So whatever trade I've taken over here or any trade over here, I know I could have gotten out of somewhere around there. Let me show you what happened afterwards. Bam, look at this. NFP came into the market, again live. You can see it was around 13:59, the May of 3rd. So let me show you the date before, again 12:29, 1 hour prior, 1 hour after. Look at this, price reached that. Eventually reached that over here, so don't worry, we reached that. But I got the direction correct. And if I'd taken a trade, I could have held that without any hesitation. Let me show you something a little different this time, okay? This is what an intraday target actually look like. Look at this. I said hard target, soft target. I'm not going into this now because otherwise this video is going to be very, very extremely long. I'm just going to leave it for this now. I'll make another video if you guys really want to know more about this. But I said to the community, live trading again. Look at this minute, right? The timer, February 19, and that was 11:33, right? I was saying for the day, I was expecting at least price coming somewhere around there. And based on understanding of the direction, knowing what was the intention of the market, I would have known where exactly I could have targeted this specific trade. Let me show you what happened afterward. Look at this. Isn't that beautiful? Like, isn't that just crazy? Look at this. So here, I knew for the day, these two were potentially target, and these were the potential target. What was the direction telling me? The direction was telling me that we are probably going to go higher. It's a smaller time frame, right? You can see the structure has changed from over here. I'm expecting price live to go all the way up there. And look at this. Look what price did. Break, coming here, break again, one entry, missed, break, entry, like countless of entries, target has been hit. So when I taken the trade from here, I could have exited easily over here for a nice 1-2. I think these trades were 1-7 or 1-, I don't know, something like this. Again, you guys can see live, timer 15:28, here 11:33, right? So literally 6 hours later, 4 hours later, whatever. So why this is important is because you guys are too much focused on just taking the trade, just taking the sniper entry, just taking the most fanciest shit ever. No, you need to know how to balance things together. Because if you don't know the target, if you don't know why target are so important, the way I just explained it to you, and what are the things, the criteria they should be using, guys, you will never make it. You will never make money, because if you don't have an objective way, and I'm telling it again, objective way to define your target based on what I just showed you on this channel, right? You will always, like 100% guaranteed, you will always, right, constantly battle with yourself, with your emotions, and by doing so, your trading will be completely subjective. And that's the reason why you will have a hard time to make money, because for one reason or another, your emotion will always take over you rather than your rationality and your trading plan. So, this being said, make sure that you watch, guys, these other videos over here, because I bring tons of value in this channel, and trust me, you don't want to miss this out, especially if you're new in this channel. I'll see you to the next one.